are less familiar with Liberty Specialty.
Yeah, sure. So we're an insurance company, insurance and reinsurance, and we are predominantly a business that is kind of runs out of Europe and the US. We're located in about 69 countries, and we've got about 2,000 employees.
Okay. Stuart, can I ask you the same question with respect to the business you lead at JP Morgan?
Sure. So trade working capital, I'm sure many of you will be familiar with some of it, but it's effectively all of the financing of movement of goods and services. Some of it is large capex like ships,
Where
power
are the
plants.
restrooms? Okay, thank you so much. I'm sorry to bother.
And occasionally we have, interruptions like that too. So yes, trade, working capital, large capex through to software contracts. We even help SAP sometimes financing some of their contracts as well. So we do an awful lot. A lot of it is risk mitigation, but increasingly working capital, finding optimal kind of non-debt working capital solutions for our clients' capital structures.
Rocky, let me start with you. I mean, you've been with Liberty for 2 years. I know you've got a tremendous amount of Treasury experience beyond that. But you've undergone a significant amount of, I'll call it technology-driven transformation at LSM. Can you perhaps talk a little bit about that journey and some of the key drivers of that journey?
Yeah, of course. So my kind of background is in ERP implementations and RFP banking solutions. So I started with LSM 2 years ago. Through that time, we've embarked on an RFP implementation. We started with, I think, circa 320 bank accounts. We're now trying to rationalize that to 150. So we're actually implementing that solution at the moment, and JP Morgan are one of our preferred banking partners. So they're supporting us with that. We're also rationalizing the liquidity structure and the money market funds along with that. We also have embarked on an SAP implementation. So we are actually at the moment in the build and design phase with S/4HANA and the Treasury solution. Globally, Liberty Mutual has decided that we will use S/4HANA as our treasury management system. So running those two in parallel is difficult, it's tricky, but I think it's a huge opportunity to bring in. Currently, the treasury function at the moment runs very manually. So we don't have the connectivity with the banks, our preferred banking partners, and we currently have about 15 banking partners, and we're trying to rationalize that to 3. So yeah, running both projects parallel.
Is a fairly documentation-heavy business, at least historically. So I guess is it safe to assume your business has undergone a significant sort of technology-driven transformation in the last 5 years as well?
Yeah, no, there's really 2 strands to our business. So we'll talk a little bit about Thalia. There's core of our business, which we call structured solutions, which is very technology intensive and has done a lot in terms of straight-through processing APIs. Still a large portion of our business in our core trade business, which is still paper intensive, where we still have not even broken through that 25% digitization rate. So a lot of where we've invested technology has tended to be more in our infrastructure, our back office, robust platforms, but really try to give our clients a best-in-class execution. But then what we're really trying to do, and we'll hear the story in terms of Thalia, is then really link with kind of best-in-class players that have that fantastic user interface, user experience. And so that's really been our strategy. And so there has been, we don't know whether blockchain is going to take off, crypto, whether it's going to be how people want to come in and interface with us. But our job is to make sure that infrastructure behind it is really robust. But we have that, really seamless integration nice user interface, nice user experience for our customers and make it as agnostic and seamless how they want to come into us.
Rocky, maybe we can just talk a little bit about, beyond the journey you just described, how has your own role changed within LSM as a result of some of what you've undergone, and what's the end state look like?
At the end of the session, if they have. Yes, I will tell them.
Overgoing, looking generally at how we want to process our cash management and payments in general. So the struggle we have is we don't just use SAP for our payment processes because we have underwriting systems and claim systems. So it's really trying to identify with all the technology that we have how we integrate our systems with our underwriting systems, claim systems, and SAP. So we're going through that journey at the moment, but also looking at that from an ESG perspective as well. So I think the next 5 to 10 years is stabilizing the account structure, looking at virtual account solutions, centralizing the bank account structure, but really driving straight-through processing, which is probably one of our main objectives, so that there is no manual intervention, be it if we're processing a claims payment, be it if we're processing accounts payable, or be it that we're placing a money market trade.
I guess that's where our paths have crossed
Yeah.
in the money market space through your use of Morgan Money, which is a technology platform at JP Morgan Asset Management, through which our investors access our own proprietary funds or third-party funds as well. But how has your use of Morgan Money complemented that technology-driven transformation within your treasury organization?
Yeah, sure. So I think the thing that attracted us to Morgan Money was it's not just that you can place your JP Morgan money market funds. It's a platform that you can use for all money market fund providers, which was quite attractive. Off the back of that, the thing that kind of highlighted to us, naturally, the yield as well that the JP Morgan provided, but also there is actually a Fury tile in SAP. And what we are doing with JP Morgan at the moment is we're looking at a solution where, again, straight-through processing, so you're able to subscribe, redeem transactions through the Fury SAP tile,
Yep.
but also then use the JP Morgan operational bank accounts, which drives efficiency in terms of electronic bank statements, processing the actual transactions. So, and then at the back of it, then reconciling it with your accounting team as well. Because we work very closely with finance, and reconciliations is a difficult topic in the insurance market because you're reconciling bordereaux, you're reconciling net settlements. So it's really important to get that kind of straight-through processing through your bank accounts,
Yeah.
and then to really analytically figure out, right, okay, well, how are we going to reconcile all these transactions?
You kind of answered my next question, but I'll ask it a little bit anyway. But I think we're hugely excited at JP Morgan Asset Management about our partnership with SAP. Mm-hmm. And so I guess I would almost characterize you as a fairly basic Morgan Money user, almost on a standalone basis. But the ability to interact with Morgan Money and likewise then be part of the SAP ecosystem through a Fiori tile or TPI integration is pretty important for you, I think, as an end journey.
Yeah, 100%. I think running large treasury teams, treasury teams, as I'm sure you're all aware, they run very, very lean. So technology is at the forefront for us, given the size. I mean, just to give you a bit of an indication, in the last 12 months, we've transacted 2.1 billion worth of claims globally. And I think to manage the risk around that and running manual processes, compliance, fraud is a major issue at the moment as well. So it's really technology that needs to drive that as opposed to manual processes.
Makes sense. Stuart, maybe I can come back to you.
Yep.
Christian talked about Thalia in his earlier comments. You referenced Thalia already as well. JP Morgan's partnership with Thalia, I guess, started in 2020, if I recall.
Correct,
when
yeah, right as
formed a
COVID
strategic-
lockdown started.
Yeah, good timing.
Yeah.
Since then, however, I guess, and again, we heard about SAP's majority stake in Thalia as well. What does SAP's ownership of Thalia mean for you and the partnership that you had with Thalia as well? Maybe you can talk about what that means for you or your clients.
Put in context of kind of where we've come since 2020, right? Obviously, we've been through lockdown. There was unprecedented kind of quantitative easing. The world was very different then than it is now in terms of rising inflation, tightening monetary policy. What we saw as we were kind of working with Thalia is, working capital was important, but there was plenty and plenty of liquidity in the market. So people tended to focus on the user experience. And so my kind of, the thing that I always disliked working in banks was always with customers, well, there's a fintech platform, there's a banking platform, we like fintech, we don't like bank, right? That to me seemed like a very silly argument, to be honest with you. You need both, right? And what we loved about Thalia was kind of the platform that allowed you to be relevant through whatever is going on in terms of excess liquidity, tightening liquidity in the market, right? You can use it as a dynamic discounting platform, but then you can also use it, to tie into kind of bank money, third-party money, capital market money, to be able to then finance your suppliers and drive working capital benefit. And I would say now increasingly less so about working capital and supply chain in terms of suppliers, more so about providing kind of liquidity so that you become the buyer of choice for your suppliers. And as we go through this cycle, there is going to be significant stress in banking markets around the world, which will impact your suppliers. Emerging market, there will be emerging market banking crisis. I guarantee you that as we go through this tightening cycle, raising interest rates. We're already seeing foreign direct investment leaving emerging markets. Europe is not going to be immune either, right? We've already seen some of the kind of reflections of what we saw in the sovereign debt crisis from 2011, 2012, with some of the rising bond yields in Italy and even here in Spain. So Thalia as a platform is something that is relevant whatever the monetary cycle is doing, whereas if you just had a dynamic discounting platform, didn't. SAP acquiring Thalia came at a fantastic time. You think about, again, where we are in the cycle, think about valuations, you think about what fintechs were doing in terms of raising money. That market has, to a large extent, evaporated. I guarantee you that a lot of the fintechs in this space that are here today will not be in this space 3 years from now. They will be gone. So SAP and the way that it acquired Thalia was a perfect moment. And for us at JP Morgan, going back to my original point around technology, right? We want fantastic user interface. We want fantastic user experience. SAP is the dominant provider of kind of ERPs, workflow management, treasury management systems in the world with our corporate base. It was the perfect fit. And so for us, it has been, a fantastic move, and we worked with SAP throughout that whole process, kept in dialogue, and as many of you will know, we retained our minority stake in Thalia. So for us, as you can see in Jim's business, my business, there is a fantastic working relationship with SAP, and I think that partnership at this particular point in time gives Thalia a unique ability to be relevant not only from a fintech standpoint, but then with the funding stability of JP Morgan behind it as well. It is a unique proposition that no other platform or bank can offer right now.
Thanks, Stuart. And then I'd echo what you said. I think our partnership with SAP has effectively allowed us to level up the offering we had on a proprietary basis. So we're looking forward to that, the evolution of that partnership. A little bit of time still. Maybe if I can ask you, Rocky, I know you've undergone a significant technology transformation. It's probably still underway. But if you stop and look back at this stage, what have been some of the challenges or obstacles that you've encountered along the way?
Scope creep. I think there is so much that we can do with SAP, and it's trying to align with the operations and with the accounting teams from a treasury standpoint. Ideally, from my perspective, I'd like 4 bank accounts, 4 currencies, and to transact through those bank accounts. although we're LSM, is based in Luxembourg as a legal entity, that's what was the vision, right? When SEPA came in, the reality is for us as an organization that we're not there. We've got to put the foundations in and then really look at how we centralize our bank account structure. The other issue we have with the insurance sector, it's very, very highly regulated. So the bank account in itself has a lot of, I guess, restrictions around it in terms of how you can use it, where you can use it, what currencies, and then we're dealing with the different clearing systems. We're dealing with Brexit. So along comes with it many challenges and all the regulation behind it, but also keeping up with the different changes in regulation across Europe and the UK as well.
Yeah.
So I think the next 5 years is about building a foundation, embedding SAP into our organization, and then really looking at how we connect to all our underwriting systems, claim systems, through SAP as well, and then driving that reconciliation, and then supporting our, I guess, brokers, dealers, and the insured. That's what we're meant to be doing. Our core business is processing claims, right?
Yeah, yeah.
In an efficient, risk-adverse way.
Okay. Stuart, maybe I can ask you the same question. Actually, you have a global role, so you can speak about it from whatever perspective you want. But what kind of challenges have you seen in sort of bringing tech into your organization in the last 5 years?
Well, I think, obviously, we're a bank. We're regulated. We are regulated by pretty much every regulator on the planet. Not all of them are consistent. But I think for us, it's been a couple of things that have challenged us over particularly the last 3 years, right? Number one has been a shortage of engineers, right? We are, as a bank, as a firm, we are always recruiting engineers. And from our own technology standpoint, we've had to diversify away from India and go to a multi-location strategy to try to balance that, increasingly focus in Latin America. That, I think, has been our biggest challenge to date on our internal infrastructure, to the point I was making before about that part of the business. Working with fintechs, whether it be Thalia or anyone else, they tend to have a different approach to recruiting, right? Not every engineer wants to join a regulated bank, and Thalia brings with it a work culture, a kind of a management culture, a philosophy that was very, very attractive to very, very talented technologists, right? And we see that. And so for us, the ability to be able to kind of brainstorm with them and kind of work together on what is needed for our customers and kind of create kind of bespoke solutions, while at the same time keeping that core infrastructure that Thalia has, the core infrastructure that we have, and tie that together, has been really powerful. And then obviously it's been linking Thalia or whatever fintech to all of our back-off booking locations around the world, right? So, you go on Thalia with JP Morgan, you can go in Chinese renminbi, you can go in Brazilian real, you can go in Singapore dollar, but all of that is a loan booking system somewhere and around the world at JP Morgan. So it's not just, hey, we've integrated with Thalia or we've partnered with Thalia. It is a deep, deep integration where Thalia hits all of our back-office loan processing systems and allows you to really have a truly global capability way beyond just kind of the G10 or G7 currencies. So I think those have been the challenges, and it's just, for us, it's always trying to find that, what is the key thing that a technologist is going to want to join a regulated bank and trying to make that sell. Hopefully now, as the market changes, maybe it'll become more attractive for that stability.
Indeed. Maybe one last question. I'll put the same question to two of you. Rocky, you've kind of touched on it a little bit already, so feel free to add or detract, whatever. But as you look out, I mean, everything's, you've made a significant amount of progress. Stuart, you as well in your own businesses. But as you look out, what do the next 5 years look like, or what's left to do? What do you want to see from your technology and banking partners as they partner together? What can they still bring to your organization? Or what's the landscape look like 5 to 10 years from now?
Yeah, so there's a couple of things there. I think there's a large space for the virtual account solution that we want to drive through, because there's probably about 3 or 4 stages for us in the kind of cash management space. First, it's obviously the bank account structure, electronic bank statements, and really using SAP as the main hub, as I guess a payment factory. We're looking at payment on behalf of, in-house cash. On top of that, we, in the next couple of years, will be looking at Ariba. So we currently use Concur for invoices and expenses. So the global solution for Liberty Mutual is Ariba. And then off the back of that, we'll be looking at Chrome River as well for our expense system. So that has probably 4 to 5 phases in that. But again, I guess it's about keeping up with technology. And I guess SAP is evolving as well, right? So like, for example, if you compare SAP to other treasury management systems, what is missing, right? So the bank account management solution, it's good, but there's going to be other regulatory requirements changing. So it's really looking at how SAP is going to manage that, and the banks.
Yeah.
And as Stuart mentioned, it would be great if the regulators and the banks
Consistent.
Just one
try
way.
to centralize that, or kind of have a harmonized approach.
Yeah.
But I tend to find that a lot of the regulators and the banks do things differently.
Right.
So it'd be good for them to communicate.
Yeah.
We do.
It would make our treasurer's life a lot easier, right?
Yeah.
But that could be done through technology. It is being done through technology, I think. Yeah.
Okay.
I think the tremendous amount of documentation as well, and the KYC, it keeps us busy, right?
Indeed, indeed. Stuart, I'll let you touch on that one as well, and then I think we probably have a question from the floor as well. We'll get to it.
Yeah. Listen, for us, we're in a completely different cycle now. I had an interview with The Economist yesterday, and I kind of used the reference that we're going to have the economy of the 70s with the geopolitics of the 1930s. And so kind of everything that we kind of knew the last 20, 30 years really isn't that relevant going forward in this decade. So for us, the technology has to be nimble for us to be able to respond, right? Our core competencies in my business are around providing that liquidity, accessing capital markets, accessing secondary markets, risk, structures, whether it's receivables finance, long-term project finance in emerging markets, whether it's supply chain, inventory finance. We bring all of that knowledge, that intellectual kind of property of how to do it, and we bring kind of balance sheet and the breadth and depth of secondary markets. But that is only as good as our technology is nimble. And it goes back again to what, I've said at the very beginning. What we want to focus on in terms of technology is our core infrastructure. We want execute, 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 execute. What we want in terms of our partnerships and what we're getting right now with SAP and Thalia in spades is that nimbleness and that focus on how the customer comes to us, right? That user interface, that user experience, how it ties to all of their downstream systems. So we make it as easy as possible for our customers, SAP's customers, Thalia's customers, to connect all together, and we bring all of what we're good at together, right? So it's not necessarily a fintech trying to do all of the risk structuring and accessing the secondary markets. It's not SAP, saying this is how you should legally construct your financing in the emerging markets. Everyone's bringing what they're good at to the table in a partnership, which should be then, absolutely best in class for our customers. And that's really what we're focused on. And again, I can't emphasize enough, forget about the last 20 years, because the next 10 are going to be completely different. And we have to be adapted to that new environment.
Thanks for that.
So we have a question. What is the biggest benefit of integrating your treasury technology into S/4HANA? And what do you see as the most important focus for the future?
It's probably best for you,
Yeah, I
Rocky.
kinda-
Unless you want to go ahead, Stuart.
No. Maybe get a job at SAP if I do a good job.
I guess the biggest benefit for us is integrating into our banking partners. And again, I can't emphasize it's that straight-through processing. I have a large team that is processing manual payments through banking portals, and I'm carrying around like 15 tokens. And I know that sounds really bizarre, but that's the world that I'm in, right? So in the next 2 years, our go live for SAP is April 2024. And that is something that is mitigating that risk as well, right? So getting up to that space is going to be difficult, and there's a lot of work that's being done. We're a very decentralized function. Our kind of accounts receivable is very decentralized. So I'm working in a kind of a hybrid environment where the treasury function is centralized, but the operations is very decentralized. So that in itself brings quite a few challenges, but that's quite normal in the insurance sector. So they're the kind of challenges, but the biggest benefit for me would be, I would have a dashboard that I would come in the morning, I'd know exactly where my cash is, in which locations with the banking partners, and how much can I invest in liquidity funds, and how much can I send up to our investment portfolio. So that would be nirvana, but that's probably looking at a 2-year, 3-year cycle at the moment.
Good. Thank you very much. There are no more questions for
Okay.
now.
Good.
You find them at their booth as well.
Exactly. Yeah. So,
Yeah.
Stuart, thank you for your time.
Jim, no, thank you.
Thank
Rocky,
you.
I know you're going to be with us for a micro session later this afternoon where we're
Yep.
doing a deeper dive on Morgan Money, I think at 2:30. But thank you for your time today as well.
Thank you.
Thank you.
Thank you, guys.
Thank you.